the show right now. Indranil, hi, morning. Good to have you on ET now as always. Just wanted to understand from what my colleague Harsh was flagging off. What is your sense about what's going to be done to the repo rate? And no hike seems like a consensus this time, but should one not expect one going forward in the foreseeable future too?
So I think we are obviously looking at a pause this time. Going ahead, I think a lot depends on the Fed. If the Fed, is done at 5.5%, then we are looking at a cut in December. On the other hand, if you expect the Fed to hike, uh, you know, either in November or December, I think the RBI will hike by 25 bips in December and then go for cuts from February. So either which way, I think the Indian rate cycle is peaking. Uh, you know, whether the cut comes in December or in February, I think depends on where the Fed is.
Uh, just curious, you're saying a cut as early as December itself? You're
Yeah,
not worried
yeah,
about
yeah.
inflation being sticky? Because there was this report talking about how even World Cup is going to perhaps add to the inflation, whether in terms of services sector, etc. as well, as early as December itself.
Well, lot of the inflation is because of rains, right? Uneven rains. Core inflation is actually down to 5% levels, number one. And World Cup, these are all transitory matters that cannot be driving monetary policy.
You call the volatility that we are seeing in crude also a bit transient matter? Because, I mean, versus what the averages the RBI had factored in, it continues to be fairly volatile. What kind of impact are you envisaging on account of that?
Well, we are not looking at a hike in oil prices at this point in time. And, we have to see what happens to crude over the year. But I think most of us have factored in a crude of around $80, $85 in our projections. So we need to wait and see what happens. But note that with core inflation down to 5% levels, we are now going to hit a real policy rate of 1.5%, and that is clearly not very low.
So, Indranil, since you said that a lot depends on what the Fed is going to do, I mean, we've seen that, globally pretty much the central bank commentaries have been still very, very hawkish. How is it that you see US inflation pan out? And what is your sense then on what the Fed is going to do? Because the dot plot does indicate another hike.
Yeah, so that's what I'm saying, that if you look at the dot plot, our call at CLSA is that the Fed is done. The Fed may hike once more, in which case the RBI has to hike once because you have to have some kind of a parity. But note that the US is shifting to a 2% real policy rate. And in the past, such high real policy rates have typically landed in slowing US growth, even recessions. So somewhere, as real policy rates start rising, I think the global rate cycle will start to peak off.
The thing that is a talking point of late is, of course, the way US yields have been moving, right? Whether 10-year, which is at 16-year high, or that 5% mark that we hit on the 30-year as well. I think the highest since 2007, thereabouts. Do you think that has peaked? Because that's also a big talking point for equity markets as well.
So, one doesn't know whether that has peaked, but then it is way below history. So the US 10-year is traditionally, historically, 100 basis points above the federal funds rate. Even today, it is about 80 basis points below the federal funds rate. There was a time when it was almost, I think, 150 to 200 basis points below the federal funds rate, because the market was expecting, not that we were, rate cuts right from June. So now that market expectations in the US, I think, are more measured, it's but natural that the 10-year yield should be going up, although it is still below the policy rate, the federal funds rate.
Sure. So, in light of all of this, Indranil, do you believe that the RBI is going to do something once again, much like the ICRR move, to try and curb and at least keep the liquidity situation under their threshold?
I think that liquidity is not going to be a challenge, once the CRR money comes in, as long as, the rupees 2000 notes remain in the system. But as people begin to withdraw, I think the RBI will have to do OMO at some stage. And we also need to know how much, of FX flows will come in or go out because of oil.
Okay, we've discussed macros, we've discussed the economy, we've discussed your outlook on bond yields, but we have not discussed cricket, and the World Cup fever has started. Are you feeling it? Have you managed to get your hands on any tickets, Indranil?
Not yet, but I will.
That's some confidence. We were just chatting with Make My Trip and they said, don't think about it. Just book your airlines as well as your hotel tickets and you can figure out the World Cup tickets later. So hurry up.
Yeah.
Okay, that's our advice to you. Thanks so much, as always, for joining in.
My
All right,
pleasure.
let's move right on then. Lots to chat about as well with